and founder of Yellow Tunnel. And today we're going to have a weekly strategy roundtable discussion where we talk about what happened in 2025, what are the 2026 might look like in the next, we'll talk about Q1, Q2, end of the year, what are the opportunities in the markets are, and tools at Yellow Tunnel that can help you navigate market volatility in 2026. Probably will be a volatile year. We do have midterm elections and still a lot of uncertainty, geopolitical, tariffs, China, Taiwan, Russia-Ukraine war. So there's a lot of uncertainty in the market. So that's the goal for today. Probably spend half an hour, maybe 35 minutes going over the content, and then leave the rest of the time for any questions you might have. So if you have questions, please type them in. Always want to kind of welcome new subscribers and answer any questions you might have. For those of you who are new, some of you are new, some of you I haven't at least seen the names before, so welcome. My background is in trading and financial engineering. I have a master's degree in computer science. I work as an executive in several startups here in Chicago. Always spend my time in fintech space. Started actually as a consultant before Options Express, and then I worked at Options Express. I was a CTO at Options Express, one of the executives from the beginning, from day one actually. I was the first employee, and worked at MediaOcean and other hedge funds, Big Six here in Chicago. So was building technology, architecture for different financial institutions, retail and hedge funds. And when the Options Express went public, I decided to manage my own money. And I've been building technology using financial engineers, latest advances in AI. I've been doing that for now over 20 years. And Keith Harwood has joined me in the past almost 2 years, and he brings the trading background. So he has a lot of experience in managing portfolio. He used to be trading on CME, I think, exchange here in Chicago, and he understands futures options intimately. So that's my background. That's what we offer in Yellow Tunnel. We do have live trading room where Keith and I manage it every day. If you haven't seen the disclosures, it is very important to look at them. Disclosures are important. Trading options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. If you haven't seen this slide before, I encourage you to visit optionsscreening.com to understand the suitability and risk associated with trading stock and options. I'll go through specific trade ideas for 2026 on the positions that I have, and that can help you navigate the market, but it's important to understand disclosures if you haven't seen these disclosures before. All right, before we talk about trading psychology, let's jump into current market conditions. All right, so let's look at TradingView. So probably the most important chart for 2026 that will drive the market, I would say 10-year and 2-year yield chart, right? You can see it in 2026, the 2-year, it's a pattern of lower highs and lower lows sitting on this triangle. Right, so you have this descending triangle. A well-defined trend. So at some point, the expectation that 2-year yield, 10-year yield is very similar, that it will break the support, right? It will break the multi-month support and continue to trade lower. So usually, in a lower interest rate environment, and inflation, also CPI, PPI data is pointing, pattern of lower highs and lower lows in terms of rental prices, dwelling, car prices. overall, oil prices, energy prices, overall the inflation is trending lower. Obviously, if you look at your electrical bill or if you look at your grocery bills, they obviously are going in the wrong direction. But still, overall, most of our expenses is our rental prices, right, and our car prices, and that has been trending lower. And overall, CPI and PPI data is trending lower. We have a new Fed chair who will replace Powell in May, right? And there are already several candidates that most likely will be pro-monetary easing, right, and lowering interest rate environment, lowering the interest rates. So as long as inflation is trending lower, and the recent data supports that, and as long as the rates are continuing to go lower, the market market setup is for another up year in 2026, maybe 10% to 15%. Right, a lot of people are calling for 8,000 on SPX. We're facing 7,000. Once we break 7,000, that opens the door to 8,000, right? And that's another, 10 to 15% rally between now and the end of the year, right? Based on the rates. Obviously, there are risks, right? We've seen that employment data continue to deteriorate. December unemployment data did show a slight increase in unemployment. So, and it's hard, if you lose a job, it's very hard to find job. The job openings also decrease. Initial claims are stable, right? People who have jobs are not filing for unemployment in higher rates. But still, a lot of economists are concerned about the economy, affordability, right? And this is something that, since it's a midterm election, something's going to be at the forefront of all the news next year, right? So I assume current administration will try to, do well in midterm elections, and the only way to do well is to address affordability issues, and whether it's some kind of a refund, tariff refund, or lower interest rates on corporate and interest rates, personal interest rate, taxes, sorry, not interest rates, but taxes. I think all of that is also the stimulant for the next year. So lower interest rate environment, lower tariffs, lower inflation environment, and stable employment market, along with the AI theme, is definitely a recipe for another bullish year. But you can see, I was in our live trading room, if I look at the weekly chart, not all stocks, the trends are changing, right? If the past couple of years, 23, right, end of 22, 23 and 24, were the year of few AI stocks, right? Like Microsoft, Tesla, Meta, Apple, Nvidia. These are the stocks that drove the market in 23. These are the stocks that drove the market in 24. In 25, if you look at, let's say, Amazon, right, chart from the beginning of 25 to where it is now, it's basically flat, right? Amazon, pretty much flat for the year, right? If you look at Microsoft from the beginning of 25 to now, I mean, slightly higher, right? Slightly higher. If you look at the Tesla from the beginning of 25, probably at the same level, right? If you look at the Bitcoin chart, right? If I look at the Bitcoin, right? It's actually down for the year, right? Google had a strong performance in 25, right? So the theme is that not all the AI, not all the stocks or companies that are just, as long as, if 23 and 24, as long as you say the word AI inside of, during your press conferences, the stocks would go higher. In 25, people are a lot more selective, and we've seen this in the prices of Oracle, right? Oracle, after earnings went up, 40, 50%, and now it basically ended the year flat, almost flat, right? After 40 to 50% rally on Oracle. Why? Because yes, they have a backlog of all the, contracts with different companies for their data centers for AI infrastructure. But that requires, billions, trillions of dollars worth of investments, and now the investment community, they're concerned, right, that Oracle might not be able to raise all that money to support these future orders, right? And whether it's Oracle, Dell, NVIDIA for that matter, you can see that not every company is going to win the AI race, right? Just similar, there's an analogy to internet bubble, right? Not all the companies survive internet bubble, right? A lot of them are gone. Some of them, like Cisco, only after 25 years came back to the same levels. But some were obvious winners, right? Like Amazon, for example, or Apple. So I think that the year 2026 will be similar, right? I don't think we reach the internet bubble type of scenario where we're going to have a crash, right, in 2026. I don't think we're at that level. At least most of the analysts don't think we're at that level. But we will probably have a volatile year, and it is important to have a strong AI theme, not only in terms of investment, but also in terms of revenue, right? One example, Palantir, right? That's the name associated with AI, and you can see 2025 is a very strong year, more than double in 2025. Why? They're not building data centers, they're not paying electrical utility bills, they don't invest, trillions of dollars in infrastructures, but a lot of, especially government agencies, require their AI expertise, their software, right? And and the company gets rewarded, right? So that, I think, is this theme for 2026, right? If you look at the value stocks, I mean, 2025 only now is breaking out, right? We are up maybe 12 points, 6-7% on VTV, RSP. So this is equal weighted S&P, right? Equal weighted S&P, we just broke through December 25 level, right? 186. So maybe 3-4% up, equal weighted S&P. If you look at the small caps, similar process, right? End of 24, we're just broke out to the new highs, also maybe 3-4%. So I think there will be, because of the lower interest rate environment and lower inflation, assuming stable employment, you do have a broadening of the rally, broadening of participation, and more companies are going to benefit from this, right? So one of the winners of 2026 that I think is going to happen based on some of the models and the signals we're getting is that your value stocks, your JP Morgans of the world, right? JP Morgan had a decent year, 28 to what, 50 points, I don't know, 15% up, right? So JP Morgans of the world, industrial General Electrics of the world, right? General Electric actually 50% up. It's a very strong year, 2025. These are the companies that will continue to outperform the market, right? The momentum stocks. Some of the AI stocks and some of the high beta stocks, like some of the favorite popular companies like IREN, right? IREN, data processing, data centers, data processing, hosting facilities, or materials, right? Rare earth metals, quantum computing, right? You can see the same charts where they're down 40-50%, right? 40-50%. So again, because they're not cash flow positive, they're very high beta stocks, and their future revenue is being questioned, right, by investors. So that's the theme for the next year, and Bitcoin is a perfect example as well. I've alluded. So if you look at the Bitcoin futures for 2024, we started somewhere in here. So I mean, we're either flat or down for the year. I mean, flat, I would say, for the year for the Bitcoin, which was also a good proxy for risk taking. So it is important to have AI tools, right? That can, now that we're in the age of AI, to help you find these trends, find the stocks that are in uptrend, right? and that can continue to outperform the market. And that's what we do on Yellow Tunnel, at Yellow Tunnel. So we have different services. You can look at aggressive power trader. This service is geared towards short-term trading, right? Short-term trading basically gives you list of stocks that the model sees that can outperform the market, right? One is Northrop Grumman. So aerospace and defense stocks like NOC, RTX, right? These are the stocks that have been in strong uptrend, right? They have been in strong uptrend this year, right? Especially European companies. When it comes to industrials, defense, the war, Russia-Ukraine war. Obviously, if there's a ceasefire between Russia and Ukraine, right, that holds, then that trade probably is not going to work, right? So you have to be careful. But assuming, you know, it's going to be very hard to reach an agreement between Russia and Ukraine, and as long as both sides are being supported by the rest of the world, you know, unfortunately, the conflict can continue, right? So model finds these trends and identifies. Fox, 21st century Fox, like I wouldn't even think about that this is something that people still trade, but you could see very strong year, right, in some of the broadcasting. Obviously, it has to do with the elections, and you know, more people basically gravitate toward Fox news channels and corporation, but you can still see that the model find these opportunities in the market. BALL, B-A-L-L, also was an example for today that you can see for the past few weeks, even though it's been in downtrend, but model does see this uptrend. And if you're a contrarian trader, or if you're looking for these long-term base processes, right, where the stock is kind of building the base for multi-years and then, you know, could break out, right, and continue to grow high, especially in the new environment where the AIs, not all the AI stocks are in the market. But these are, again, short-term trading. These are the signals for short-term trading. You can see spiders for today predicted that 681 is going to be support, 688 is overhead resistance, and we're trading right at that level. These numbers are posted every day, right, before the market opens, right? They're posted before the market opens, and it shows you 681, 687 support, and for the next 3 months, model sees that there is the path of least resistance is to test and potentially break the 700 level, right? Whether it happens in January or February, we will find out, right? Based on the earnings season, the next focus is earnings season, which is expected to continue being, you know, companies continue double-digit growth, the expectation that they will grow their revenue at, you know, double digits or upper single digits numbers. So that's prediction for longer term trends. So you have long-term trends and then you have short-term, right? 10-day, 693 it sees, and then support 681, 687. So this is the short-term trading for aggressive power trader. And again, these are the models run every day. Aggressive power trader runs every day, and then Keith and I look at this data and we make, you know, if we agree with the model, we do have this qualitative and quantitative analysis, right? So quantitative is the models based on AI, neural networks that we've been developing for 20 years and used by several hedge funds. You know, similar type of models are used for large hedge funds. And that's, you know, that's the output of the models. And then we look at it from qualitative point of view and see if we agree with the models. Because the idea that AI, you know, we're still far from, you know, AI that can think on its own and write it and modify itself. That's still kind of in science fiction realm. I mean, if you talk to Elon Musk, he probably will say it's sooner than later, but I still think, you know, AI is a great tool and it will help with performance and efficiencies, but it's not going to, you know, it's still not going to be at the point where it's just completely independent, not anytime soon. So you do need this oversight. So we do have that oversight on the qualitative analysis. So this is a weekly power trader. It's a little bit different model. It analyzes larger data sets. The prediction is for 5 to 10 days, right? So the idea is that you hold these positions for a couple of weeks, maybe a month, right? And they run on Sunday, right? So the model runs on Sunday, and then Keith and I look at the AI signal, and then we basically, if we agree, we post them here. So you can see today, actually all the symbols are down together with the market, but ALB, right? Some of the materials. Obviously, one of the winners this year were materials, right? And precious metals like silver, right? So silver is in strong uptrend. Gold is in strong uptrend, ALB, right? Some of the chemicals, or in strong uptrend in 25. Metals and miners. In strong uptrend. So model sees that, identify MasterCard. So whether it's a MasterCard or American Express, right? You can see it's a pretty strong year for some of the credit cards, and continue to grind higher, right? Healthy economy, people, wages are still growing, right? Maybe they're not accelerating in the growth, but they're still growing year over year, and people have jobs, right? So cyclical names, consumer discretionary names, they're continue to, not consumer discretionary, but retail stocks continue to grade higher, and consumer discretionary names. So MasterCard, some of the winners this year are broker dealers like Morgan Stanley, Goldman Sachs, right? You can see have a very strong performance in 2025, right? Lower interest rates, better IPO market, more companies going public, mergers and acquisitions. And this is the bread and butter of some of these investment banking firms. And they are definitely been a signal throughout the year, and the model is still showing that the signals are valid in the next year. Pelletier, right? Another signal. There's not a lot of tech stocks have signals, but you can see Pelletier is an exception, and it is trading in a strong option, even though it's a triple top, so you have to be careful. But for now, model does see that buying Pelletier at 50-day moving average makes sense. State Street, another investment banks, and TJX, some of the retail names like TJX. Right, Hasbro was another signal recently. You can see they are, they have a good year, 2026, and some of the retail companies continue to grow and higher, even KSS, I think. I mean, not bad year, right? For even stocks like KSS, right? Up almost 50%. How's Macy's doing? I haven't looked at the stocks for quite some time. Macy's, pretty good year for companies like Macy's. So you can see a strong upward momentum in retail stocks, and the model identifies the stocks that, short term, medium term, can also outperform the market. Some of these names, so you can see if you want to leverage your stock position, you do get suggested options, right? At the money options. It could be, you can use weekly options. If the weekly options are not available, you can do monthly options. So it gives you that suggestion as well. But still, when you manage your position, you manage all these entry prices, right? And it's a pretty wide, 681, 687. That's 1%, right? So even if you let's look at the midpoint. If you can save even 0.5%, right, between entry and exit price, over a long period of time, that can help you grow your portfolio, right? Because the model will tell you you're better off buying at the support and selling over at the resistance. So buying 687 doesn't make sense, but if we get closer to 682, then it makes more sense, right? And you're going to analyze your own stock, right? If you want Pelletier, or if you want, what about Nvidia, right? You can analyze any stocks even if there's no signal. So it gives you the same type of analysis, right? In NVIDIA, it shows you yeah, short term it's an uptrend, but longer, medium term, NVIDIA has been struggling, right? So potentially reaching 165 level. So you can enter any stocks you have, and it will give you that analysis. Any questions? So that's the weekly power trader. Dynamic power trader is, these are not the signal, these are the signals, but that I'm actually using in a live portfolio. So you can see today, I traded Pelletier. Not only it was a signal, but I also traded Pelletier. And here I give an example of both stock and options, right? Sometimes I do weekly options, sometimes I do monthly options. And then, if people are more comfortable trading stock, then I would provide a stock example. So this is an example of a Pelletier live position. Again, you can see option, it gives you option strategies. You can actually see my orders. You can see my positions. You can click on SMS setting, look at the SMS, set up a text alert, right? You also get emails every time I trade. You get text alert every time I trade. And you can look at the history of the portfolio, right? Every week, you can see what the portfolio looked like. You can watch the recordings, right? There's a live trading room recording you can watch every single day. You can have strategy roundtable, different active investor workshops. You can, if you want to learn about how to, if you're not familiar with option spreads, but you want to learn about option spreads, all of that is available in our library, our video library, and AI analysis. We also have earnings power traders where I trade earnings. We're approaching the next earnings season. That should start in the next 2 weeks, right? It was banking announcement. It's very important, right? Usually January sets the tone for the rest of the year, right? If January, as a result of the, industrial and banks earnings and no other geopolitical events, and we have a strong January, then the rest of the year will probably follow January. If the earnings are disappointing or we have some kind of a geopolitical risks or events, right? Somebody's invading someone. Or escalation in tariffs rhetoric, right? We have escalation between Japan, China, United States. That's also kind of on the front of the news, but assuming that doesn't escalate to where it affects the market, January is important, and then we have earnings power trader that can help you trade these earnings. This is where this is probably the most aggressive portfolio where I trade short-dated options. And the idea is usually I'm either long volatility or short volatility, right? Where I can structure the trade, we're looking for double-digit returns in short period of time using options, right? 50%, 100%, 200% returns. Using more advanced option strategies like spreads, two-legged, three-legged, four-legged strategies. So that's earnings power trading. Finally, Profit Accelerator is where I trade stocks. So a lot of people ask us, Vlad, you're a stock trader and I'm an option trader, or I'm an option trader, you're a stock trader. As you've seen an example of Pelletier, I do both, right? I do stock trades and I do option trades. And this is a portfolio where you can see these trades. So, so my take, I agree with most of the economists, and that next year is going to be a positive year, right? I think interest rates are going to continue going lower. I think employment market is going to be stable. I think the current administration will be supportive for the growth because they want to get reelected in midterm elections, but we will have, just like 2025, we had a 10% pullback in spiders when there was escalation in tariffs. I think it's reasonable to assume we're going to have 10-15% pullback next year, and maybe multiple 10 to 15% pullback next year, because there's just always, a lot of uncertainty in the market, and especially with midterm elections, a lot of people are going to watch out for the news. But I think yield is going lower. Still, trading away from the dollar. Dollar will continue to grind lower, right? I think silver and gold metals will continue to grind higher, and I think it'll be a year of small caps, and I think it'll be a year of value stocks. I think value stocks, small caps, And some of the AI stocks, whether it's Palantir, right now Palantir, Google, and Apple look like other leaders, and assuming they can still innovate and deliver during their earnings, they're going to be the winners, right? If you're a contrarian trader, I think Microsoft got punished, and I think Microsofts of the world will also be able to deliver on the earnings, and I think it'll be a strong year for stocks like Microsoft or Amazon. Will do a catch-up trade since they are flat for the year. All right, that's all I have for today. We do have a lot of people: Alex, Clay, Dennis, Eugene, Frank, Joseph, Linda, Martin, Morris, Mike, Dr. Simon, Rodney, Vincent. A lot of people are here. So I appreciate you guys joining. Thank you very much. Any questions about 2026 Yellow Tunnel, or any other questions you might have? All right. Well, thank you for joining. I appreciate we have a lot of people today, despite the year end. A lot of people are kind of already getting ready for New Year. Happy New Year to everybody. I hope you're going to have a happy, healthy, prosperous New Year. And next Tuesday, we're going to have a strategy roundtable. This will be next year. So please join me at the same time, 12 o'clock. We'd love to have you here. That's all I have for today. Thank you very much, and have a great day. Happy New Year, everybody. Vincent, thank you. Appreciate it. Rodney, thank you for joining. Dr. Simon, Mike, Maurice, Martin, welcome back. Joseph, Eugene, Dennis, Clay, Alex. Thank you, guys.